Welcome to the Deep Dive, your shortcut to being well-informed. Today, we're tackling something pretty interesting, a real paradox from the business world. You've got this major retailer, they miss their earnings forecasts, right? But then their stock price actually jumps up. So what on earth is going on behind those numbers?
Yeah, it's a great question, and it really shows how investors often look, beyond just the headline figures. So our mission today is really to unpack Home Depot's Q2 2025 earnings. We want to explore what actually drove that investor confidence, despite the financial miss, and also what their forward guidance tells us about their strategy moving forward.
Okay, let's dive into that initial surprise then. Home Depot just reported Q2 2025 earnings. And yeah, if you just glance at the headlines, they definitely screamed slight miss on earnings per share, EPS, and revenue. Looking at the specifics, EPS came in at $4.68. That was just below the expected $4.72. So what's that like? A 0.85% miss. Tiny. And revenue, $45.3 billion, just slightly under the forecast of $45.44 billion. Again, minor shortfalls. But here's where it gets really interesting. Despite this, Home Depot stock, it actually rose by a solid 3.95% in pre-market trading, reached $401.10 a share. So yeah, how do you square that? A miss and a market rally.
Well, what's fascinating, I think, is that the market's reaction clearly wasn't driven just by those raw numbers alone. If we connect this to the bigger picture, it really reflects significant investor optimism about the company's strategic direction, sure, but also its operational improvements, things that got a lot more detail during their earnings call. Think of it this way. The reported diluted EPS for Q2 was $4.68. Okay, but their adjusted diluted EPS for Q2 2025 was also $4.68. And that's actually a slight increase from $4.67 last year. So while it was a hair below what analysts expected, it was still, year-over-year improvement on an adjusted basis.
Okay. That distinction between reported and adjusted, that's important context then. Helps understand the full picture. So even with that slight forecast miss, their total sales still climbed by a healthy 4.9% year-over-year, hitting $45.3 billion. And comparable sales, that key metric for retailers, right? Measuring growth from existing stores. They were up 1.0% overall. And even better, 1.4% right here in the U.S. That seems like a pretty strong sign of underlying health, doesn't it?
Absolutely, yeah. And to put that into context, CEO Ted Decker, he commented that these results were, quote, in line with our expectations. He emphasized that the momentum they saw from the back half of last year just continued. Customers were engaging more broadly in smaller home improvement projects. And he highlighted this as the strongest performance we've seen in over 2 years. So that suggests, a pretty stable, engaged customer base, even with economic shifts.
Okay. So what does this all mean for you, the listener, trying to make sense of Home Depot? How do they manage to impress investors when the numbers, on paper at least, look like a miss? It seems to point pretty clearly to strong operational execution and maybe a long-term strategy the market really believes in. Let's start with the customer. The CFO, Richard McPhail, had this insight. Their core customer, whether it's the homeowner or the pro working for them, they're, quote, fully employed, have seen strong income gains, and are sitting on over $11 trillion in home equity. That's a massive foundation, right?
It certainly is. I mean, that financial stability for their core customer, that's a powerful base.
Yeah.
But the real game changers, it seems from the sources, are their strategic initiatives, especially around strengthening what they call their pro ecosystem.
Right. I saw that too. For instance, that SRS acquisition they did over a year ago, apparently a huge success.
Yeah.
Exceeded expectations, boosted their organic growth, drove revenue synergies, but now they're going even further. This pending acquisition of GMS, a big distributor, right? Drywall, ceiling, steel framing. This isn't just adding more stores. It feels like a strategic move for the really lucrative part of the construction market.
Exactly. Yeah, this GMS move is expected to add, 400 new distribution nodes? That brings the combined SRS network to over 1,200 locations. We're talking 3,500 associates, 8,000 trucks. The insight here is pretty profound, I think. Home Depot isn't just, selling to pros anymore. They're aiming to build this, unassailable one-stop ecosystem to really lock in that professional customer, make Home Depot indispensable for their big, complex projects. It's about having the product breadth, the specialized service, and critically, the logistical muscle that smaller players just can't match.
That is a powerful vision. And it's not just the big acquisitions, is it? They're also focused on integrating things like trade credit and order management for these pros. We heard thousands of PROs are now using Home Depot's trade credit. And get this, they're seeing a double-digit lift in their spend once these pros start using it. That's more than just a financing offer, isn't it?
Oh, absolutely not just financing. This is a really shrewd move. It helps pros grow faster, cuts down their admin hassle, and, deepens their reliance on Home Depot. It turns a simple supplier relationship into more of a partnership. Imagine you're a busy contractor, right? Trade credit smooths out cash flow on big jobs. And integrating it everywhere, B2B website, in-store, on-site, just makes Home Depot the easiest option, the path of least resistance. Their new order management system sounds pretty key too, letting pros reserve inventory, change orders before they're fulfilled, even get invoiced on delivery. That simplifies complex job site logistics, which, for any busy pro, that's invaluable.
Yeah, that makes a ton of sense. So make it easier for pros to spend more, work smarter. Got it. But it's not just about the pros, right? They're also using tech to improve things for everyone. Home Depot now boasts, quote, fastest delivery speeds across the greatest number of products. Same day, next day options. And they're using machine learning, apparently, to ship from best location, which leads to another double-digit lift in spend from customers using those faster delivery options.
Right, and that double-digit lift from faster delivery, it's not just speed. It shows that, today, convenience and time saving are so valuable, people will actually spend significantly more for it. It's Home Depot really monetizing operational efficiency, mastering it. Their digital side is growing impressively too. Online comparable sales up around 12%. They're using AI for better search results, making it easier for you, the customer, to find what you need. And they've improved the buy it again features. Super easy reordering for common stuff, just removing friction from buying.
So it sounds like they're really catering to both ends of the spectrum. The weekend DIYer needing a quick delivery on, say, a grill, and the seasoned pro building an entire extension. That's quite a balancing act.
It is. And the strength really extends to their core products, their merchandising. It wasn't just a few hot categories. We heard 12 out of their 16 merchandising departments posted positive comps, described as the broadest performance in over 2 years. That points to widespread health across their offerings. They saw strong results in those pro-heavy categories like dimensional lumber, concrete decking, sure, but also solid DIY strength in seasonal stuff like patio, grills, live goods, even big-ticket buys over $1,000. Those were up 2.6%. So it paints this picture of broad engagement. Both types of customers are buying.
And they're clearly innovating too, not just relying on existing products. The sources mention things like an exclusive Kills branded primer and paint driving share gains. Company record sales for battery-powered tools shows they're competitive in that hot market. And bringing out new storage solutions like mini totes, better systems, it's just a really comprehensive approach. And it ties back to that initial investor optimism, doesn't it? It's not a fluke. It feels deliberate.
Indeed. Yeah, it really demonstrates a deep understanding of their market and a commitment not just to meet needs, but to anticipate them with new stuff.
Okay, so this deep dive really shows that Q2's slight miss was, well, clearly overshadowed by these big strategic gains and strong operations. Which makes you wonder then, how is Home Depot guiding for the rest of fiscal 2025? What's the outlook look like, especially with all the economic uncertainty we keep hearing about?
Yeah, that's the important question, isn't it, about their future outlook. And it's quite telling, I think, that they've reaffirmed their fiscal 2025 guidance. That signals real confidence, despite the broader economic environment. So they're projecting total sales growth around 2.8%. Comparable sales growth around 1.0%. That's for the comparable 52-week period. For diluted EPS, they expect about a 3% decline compared to fiscal 24, but remember, that was a 53-week year. So on a comparable 52-week basis, their adjusted diluted EPS is expected to be, well, essentially flat. They also expect to keep gross margin steady around 33.4% and plan capital spending at about 2.5% of total sales.
Okay, so a stable outlook overall. But there were some crucial caveats, right? Things not included in that guidance.
Exactly. That's the key nuance here. Crucially, this guidance does not include any assumptions for that pending GMS acquisition, or for swings in foreign exchange rates or changes in interest rates, or, and this is critical, a big recovery in demand for those larger remodeling projects. So that suggests they're being pretty conservative, assuming current market conditions mostly stick around. And this is where those macroeconomic factors really come into play. Interest rates, they're still a risk. They could definitely impact those bigger discretionary home projects. CEO Ted Decker actually noted that economic uncertainty is the, quote, #1 reason for deferring the large project. He did express hope for some relief on mortgage rates to help what he called the frozen housing market.
Right. So lower rates would help, obviously, but they aren't banking on it in their forecast. That's cautious. What about other external factors? Anything on the positive side that might influence their year?
Yeah, on the positive side, they pointed to the benefit of settled tax rates and those increased child tax credits. That should put, quote, more discretionary spending in our consumers' wallets, which helps Home Depot directly. They also expect a cash tax benefit from things like bonus depreciation and fully expensing R&D costs. And regarding promotions and tariffs, there's been, modest price movement from increased tariffs, but Home Depot is sticking to its everyday low price, its EDLP strategy. Their focus, as they put it, is on protecting the cost of the entire project for customers and maintaining price leadership. So even with tariffs, they're trying to absorb costs and deliver value.
That commitment to EDLP, that's a huge differentiator for them. It really sounds like Home Depot feels confident they can, quote, grow market share in any environment. By just strengthening their competitive position, focusing relentlessly on that customer experience, whether it's the everyday DIY or the complex pro, it's really a testament to their long-term strategic thinking.
It absolutely is. And what this suggests, I think, is that in today's, dynamic markets, understanding a company's strategic investments, their long-term value proposition, that can be just as important, maybe even more important, than a single quarter's slight miss on a forecast. Which it raises an interesting question for you, our listener. How do you think companies will continue to redefine value for consumers and pros,
Right.
especially as technology and economic conditions just keep evolving?
Yep.
Will it always be about speed and selection, or will new things emerge as being most important?
Lots to think about there. Thanks for diving deep with us.